Meanwhile, let's go across to the management of Raymond. Posted a good set of fourth quarter earnings. The company clocked in almost a double-digit revenue growth, saw a 100 basis point improvement in the margin as well. And real estate business was strong, nearly 1,600 crores worth bookings in FY23. Amit Agarwal, who's the group CFO of the company, joins us now. Amit, let's keep it simple. What kind of revenue growth and margin trajectory do you foresee in FY24?
With our corporate initiative that we have de-merged the company into two. One is a lifestyle entity and another would be the Raymond Limited will continue to be a real estate company. So with that, and both will be pure play net debt free companies, will have charted out a very clear, significant growth plan for both the businesses. So we are looking forward over the next 3 to 5 years, let's say in terms of lifestyle business, mid-teens growth, and in terms of the real estate, excess of 20% plus growth on a go-forward basis over the next 3 to 5 years.
Right. Amit, branded textiles in the fourth quarter saw some muted growth. Could you tell us what kind of outlook you're expecting this upcoming summer wedding season?
I would not be able to give you specific guidance about segment by segment on a quarter-to-quarter basis because that's what, as a company policy, we don't intend to do. However, I can tell you one thing, that the fourth quarter, what happens is, last year, there was a little bit more wine spree compared to this year. And that is why you've seen basically a flat revenue for our branded textile business. However, as I look today, I think so far the April has been little muted, but we expect, as we hear from our shops and dealers and franchisee network, that now in the next week or so, they should see a good momentum picking up as there are a good number of weddings in the month of May as well as in early June. So we are expecting some little pickup in the demand between these 2 months, May and June.
Okay, that's good to know. You know, your branded apparel segment has seen very good revenue growth. It's, I think, about 19-20%. Is this a sustainable growth rate given that demand has picked up? And what is the outlook as far as the retail store openings are concerned? Yeah,
so actually, if you see the net new, the way we are considering this whole thing is that store expansion is a part of this. And I think the way Raymond is now with the capacity to grow and invest behind, I think we are primarily going on a FOFO model in order to grow our business. So in 22-23, we have opened about 450 stores. And going forward in the 23-24, again, we are targeting anywhere between 150 to 200 stores next year, this 23-24. And we see a very clear expansion path that when we grow the stores, it could be the Park Avenue, it could be Ethnics by Raymond, it could be Raymond or the Color Plus or the TRS format. Across different formats, we should be opening anything between 150 to 200 stores on a go-forward basis.
All right, 150 to 200 stores is what you're looking at. But, you know, the average transaction value was up around almost 25%. I presume a large part of that was also on account of inflation. Now, do you see this number slow down as inflation calms?
Actually, you know, the ATV growth is not dependent only on the inflation. Let us be very clear that there is no way I can increase the price by 25%. That's just not possible. However, what has happened is there is a significant amount of premiumization which has come into the play. So people, let's say, who was buying 1,000 rupee meter fabric, he has moved up to a 1,200 or 1,300 rupees a meter fabric. So that way, maybe the customer wants to improve his lifestyle, improves his living standards, improves better quality of fabric, and that is helping us to get this kind of an increase in the average ticket value, and which is clearly reflected. And if you see quarter over quarter, we have been able to show compared to the last year that anything between 22 to 30% there has been growth in the average ticket value.
Okay. Amit, real estate, let's come to that, witnessed strong booking value. What have been collections and how do you see this trend going forward?
Actually, you know, very simple is that is a one very sweet spot for us, that our demonstrated performance of delivering the apartments 2 years ahead of RERA has actually propelled the booking level also. And in my first two projects, we have already sold 80% of the total inventory. And in the third project, just to give you perspective, we launched in February, and within 1 week, we sold almost 100 apartments or 100 apartments. So I think that is very clearly reflective that you provide a product which is of a great quality, great configuration with great amenities at the right price. And I think that truly helps us to get us in the Thane micro market, so to speak, a market leader. We are witnessing this quarter after quarter, and our bookings have been very, very strong. And you see, as we construct fast, our revenue recognition, because it is based on completion method, gets very strong. Therefore, we expect this momentum to continue going forward in the next year.
Okay, and what does your launch pipeline look like, and what is the unsold inventory levels currently?
So actually, if you see, the launch is very clear. We have sold in the first two projects 80%, so hardly much of an inventory is left. So therefore, you have to keep launching. And we still have 60 acres of land in Thane which needs to be launched, and which appropriate time we will be launching. So that is something which we have clearly, so to speak, a feedstock available to us in order to launch and build upon.
Okay, and how much time do you think this separate listing of RCCL could take? I mean, what are we looking at in terms of a timeline?
The demerger process goes through the NCLT regulatory, and it is a question of 12 to 14 months, which we think we would take. And since the date of effective merger is 1st April 2023, we see over the next 12 to 14 months, this should be done. And we would have two separate listed entities with very clearly net debt-free, pure play listed entity. Raymond Limited, which is a real estate as a prime focus, and engineering business as the investment subsidiaries, and the Raymond Consumer Care with mainstay of the lifestyle business. Okay.
Mr. Agarwal, the important question is, from the total cash that's coming from the sale of this business, how much will go to the lifestyle? How much will go to the real estate business? Can you give us a sense?
Between the two companies, we'll have 1,500 crore. So we have not yet identified exactly.
Thanks a lot for joining in, and have a good day. That's Raymond. But let's